Welcome back, everybody, to SF Live. My name is Kai Hoffman. I'm the @JR Mining Guy on Twitter and the CEO of the Soar Financial Group. If you haven't watched any of our other videos, still, I'm going to say it. Happy New Year. Health and wealth. I'm stealing it from the Lobo Tigre interview. Love the term health and wealth to you. All the best for 2023. And we have a doozy lined up today. And the green chicken is joining us again today. Doomberg himself. And it's interesting because I have to turn to him, somebody who's sitting in the US, to tell me about German energy policy and how we're actually doing. A lot of friends of mine ask me, like, Kai, how's Germany doing in this winter? And how are you faring? How is everything going? And I'm going to ask the same question, actually, to Doomberg, because I don't have an educated answer. I just know that we're doing okay, but he's going to tell us at what cost and why we're doing okay, because it's not that obvious if you just look at the mainstream media. So we'll dive into that, and I'm excited to have him on. Doomberg, thank you so much for coming on. Happy New Year to you as well, and to health and wealth.
Yes, health and wealth to you, Kai. Great to be back. And the world has changed a lot since we last joined you in July. And those are very pertinent questions right now, and one that I'm certainly feeling a lot, both from our subscribers and various other people on Twitter. So I'm happy to address it head on with you here today. And I'm really glad that it's relatively balmy in Germany and you got a big smile on your face.
I do, actually, yeah, because I don't have to heat my office here because I'm using two computers, and I don't need external heat, which is great. It's way too warm in my office. And here as well, like I told you before we hit the record button, I was wearing shorts on December 31st. It was 16 degrees. I'm just outside of Frankfurt.
This is the answer to everyone's questions, right? And so I think when we last discussed, we were talking about how Germany was taking a significant gamble on the weather, and whether or not that gamble would pay off, that was an unwise policy, integrated over time. You don't always win at the craps table, but so far so good, knock on wood. A couple of things have transpired. One, as you mentioned, a super abnormally warm winter, which is sort of ironic, I guess, if climate change is bailing out Europe. But beyond that, again, as we were discussing, a couple of other things have occurred. First, Germany has done a miraculous job of bringing back on the dirtiest form of power, which is coal. And I believe I read somewhere something like 16 gigawatts of coal capacity have been urgently and efficiently and quite engineering miracle has been brought back online. And for many periods of time during the relatively cold parts of early to mid-December, coal was the single largest source of primary energy for Germany, because, of course, they were in the doldrums, as you know. Sometimes the sun doesn't shine for extended period of times, and those periods can coincide when the wind doesn't blow. And Germany had to fall back on coal and the three remaining nuclear power plants that they reluctantly decided to keep back on, which was a wise decision and also something that has changed since we last talked. And so that combination of events, basically over the period of months, Germany scoured the world for any and all sources of BTUs, regardless of carbon footprint or price. And when we tally up the price paid to sort of clear the market of every available BTU at the expense of other countries who couldn't afford to match Germany's bid, I believe the total bill, as estimated by Reuters, was $500 billion. And so at the expense of $500 billion and with the blessings of Gaia, the god of Mother Nature, so far so good for Germany. And we would be the first to hope that the spell of good luck and good fortune continues, so long as the current slate of German leaders do not take this spell of luck and misconstrue it as wisdom, because they do have to do it again next winter. And the worst case scenario would be that they take all of the wrong lessons from what essentially is a welcome spread of good luck here.
No, very, very good summary of what has been going on. I was going to ask you recap 2022 for us, but you've just perfectly done that. Let's talk about like the current situation we're in. But you hinted at 23, 24 and the turn of that. Let's talk about what is Germany or Europe or maybe the world doing to sort of prepare for that, because the Iron Curtain doesn't feel like it's going away. And how are we preparing for the next winter? Right, we're building LNG terminals. At least 2 or 3, right? And we're buying gas from Qatar.
Exactly. And a few other things as well. The coal plants, having been turned back on, are always going to be an option. And I do believe that, and when we say Germany, we're sort of speaking broadly Europe, but Germany is sort of the center point of this thing. Coal is being stockpiled. And I do believe that Germans will not shut down their 3 nuclear power plants come April, that there will be a sort of political song and dance where the Greens will be seen as fighting and and losing, but after a gallant battle. And the Germans will maintain the optionality of those three large plants heading into next winter. And I do wonder whether the market isn't pricing in a little higher probability of peace breaking out between Russia and Ukraine than maybe some of the media are portraying. And that if that happened, of course, then the crisis, I think, would be effectively over, because you still have one remaining pipeline of the Nord Stream 2 twin pipelines. There's Nord Stream 1, both pipelines were destroyed, and Nord Stream 2, one was destroyed, but there is still one intact that's pressurized and ready to deliver product. And of course, you have overland pipelines that, through, I believe, a minor miracle, have not really been damaged as a consequence of the Russia invasion of Ukraine. And so in a world where peace breaks out, that would be a significant silver bullet to the German energy crisis. But I would say, as long as you're willing to admit that it required $500 billion and a total obliteration of Germany's environmental goals to, quote, make it through the winter, in addition to the good luck of the weather. If you don't believe that that is proof of crisis, then I'm not sure what I can tell you. But they did what they had to do, and kudos to them, because it wasn't always clear that they would be willing to bring back on as much coal, or frankly had the technical capabilities to do so. But that coal comes back online at a consequence, of course. If on the one hand you claim that carbon emissions are going to lead to the death of the planet, and then on the other hand, at the first sign of crisis, you bring back on as much of it as you can, pay the market clearing price. I mean, the market price for coal was up 7, 8, 9 times historical averages seen as little as 2 or 3 years ago, and Germany was buying every ton that they could. And so you had German PPI at 40%. You had $500 billion wasted, as we said in one of our most recent pieces, The Winds of Gaia. That $500 billion could have bought an entire generation's worth of state-of-the-art nuclear power, and instead it was squandered on 1 year's worth of gas, oil, and coal. And if that is somehow perceived to be a victory, then good luck to you going forward.
You mentioned $500 billion. I'm just wondering, like, one question just popped to mind, and I didn't plan for that one, but time frame. It's like spending that $500 billion. Like, what time frame are you looking? Because it feels like we're always reactionary, right? So that's why we paid the premium, obviously, on everything. How does that fit together? It's like, I'm just curious. I'm trying to poke a bit of a hole in your theories,
Sure,
obviously,
well,
as well,
I mean,
and challenge you a little bit, but to the extent of my knowledge here. But like, how does that fit together? Over what time period are we talking? Because that $500 billion was spent pretty much in 6 months.
It's very quickly, yeah. And I mean, let's just think about where it went. It went to the cost of the energy itself, and it went to bailing out of the consumers and the businesses that would have been negatively impacted if the current price paid were passed on to consumers, right? And the opportunity cost is you could have built more solar panels, more wind, more wind turbines, pick your favorite. Or in our preferred embodiment, you would have built more nuclear power. You would have built the transmission lines needed to enable the hydrogen revolution that everybody's dreaming about. Like, there were things that you could have done instead of lining the pockets of the fossil fuel industry effectively and stoking inflation by bailing out consumers. But they didn't. And so far, so good on the weather. Imagine if they had done all that and we had a remarkably cold weather spell. And by the way, to address it directly, it's not like we were sitting here cheering for cold weather to somehow validate the warnings that we were trying to issue back in spring and in summer, when this looked like it was a pretty dicey situation, and natural gas in Europe topped out at $100 per million BTU, which is just an unthinkable number. It's down something like 80% from those highs, thankfully. But when you're trying to warn somebody of a policy and then they take aggressive action to abate it, I think that's a very good outcome. I mean, the fact that Germany is burning coal today, while suboptimal, is a lot better than the consequences that would have been felt if they hadn't done that, or if they had foolishly shut down the remaining 3 nuclear power plants. So they made the decisions they had to make. They paid the price that they had to pay, and they got lucky. So good for them.
Yeah, that's not a strategy for the future. As you said, getting lucky at the craps table. Usually a 7 comes around whenever I start betting, right? So I'm staying far away from the energy bets. Oil is sort of proving me right today as we're recording January 4th. Oil is down 4%. Well, globally, we talk a lot about Europe and Germany, and how's the energy market looking globally? Because oil seems to be under pressure, $73 a barrel right now. What's your perspective on that?
So when you're talking about something as fundamental as the price of oil, you have to think about all the flows, the bullish flows and the bearish flows. And a lot of those flows happen, below the sea line. You see the tip of the iceberg, and you wonder what's going on. So right now, what are the flows? Well, there's rumors in the U.S. market that the Biden administration cut a deal with the Saudis. essentially to give immunity to MBS over prior issues that the U.S. may have had with his behavior vis-a-vis the death of that reporter. And in exchange, the Saudis agreed to sort of lighten the reins a little bit on pressuring, OPEC Plus, or going along with OPEC Plus on production cuts to defend the market price. That's one flow that's bearish. A flow that's temporary bearish but could be quite bullish is the reopening of China. And I always say when I talk about China that no Western analyst really understands what's going on in China. And if they say they do, with rare exception, they're probably stretching their credibility a little bit. We do have many, many friends in China, and I could say definitively that the zero COVID policy Band-Aid has been fully ripped off. The pivot is 180 degrees. And our view is that for the next several weeks, especially heading into and coming out of the Chinese New Year, we're going to see significant disruptions, which the market could misinterpret as a failure of removing the Band-Aid. I think once they sort of swallow all the consequences of ripping off that Band-Aid, they're going to come roaring back very shortly thereafter. And from our contacts in China, life is very, very quickly returning back to normal. And just like we saw here in the US and in Europe, when we finally lifted COVID, there was a sort of a mania of consumerism, travel, spending, restaurants, getting out, doing the things that you weren't able to do. And of the regions we just mentioned, China has been locked down for the longest. And so the pent-up nature of that demand, you would think, and the excess savings, you would think would be an amplified version of what we experienced here in the US and what Europe experienced when they finally came out of COVID as well. And so I would argue that while short-term bearish, the re-entry of China onto the global stage is long-term bullish. We have the slowing down of the draining of the Strategic Petroleum Reserve, and we are also past the immediacy of the U.S. election. So I think that's probably bullish for oil on a go-forward basis. You have year-end selling either before or after the 31st of December for tax purposes to get through. So I wouldn't read too much into last week of the year, first week of the year price action. Broadly speaking, if the global economy sinks into a recession because the Fed keeps tightening and keeps hiking into a relatively slowing economy, that is bearish for oil. So when you add up all those flows, I think obviously the current market price is discounting what it thinks is the integral of those flows. But broadly speaking, I think you have to sort of be bullish oil if you're not totally bearish on the economy in 2023.
That's interesting. Because I've been interviewing a few guests left and right, and a lot of people are expecting a complete market collapse in 2023, especially more it's second half of the year, maybe late summer. So that's quite interesting. Jumping around a little bit, because we talked about the oil price, and I wrote a question down because I wanted to ask you, because I'm trying to make sense of an oil price cap and how it would work. Germany or Europe and the US saying, well, we're not going to buy Russian oil above $60. $73 right now. How does that work? And aren't you just sort of pushing Russia and others into the hands of other currencies in that regard?
Well, let me just go back to the previous point and then correct something you just said. And okay. on the previous point, if we do see a global economic collapse, I would be very bearish on the price of oil. These commodities are inelastic, and very small differences between supply and demand can drive them skyward, and they can crater them to below zero, as we learned for COVID. And so if your macroeconomic outlook is you're expecting an economic crash, then you should be bearish oil, and that would overwhelm all the other flows that I just discussed. To your question, actually, the cap is even more bizarre than that, and we've been very critical of it, but mostly because we can't believe that people think it'll actually work. It's not that the G7 and participating countries won't pay more than that price for Russian oil. They won't let other countries pay more than that price for Russian oil. They want to put a global price on the global cap on the price of Russian oil, and the means by which they propose to do this is by leveraging the fact that the G7 has a monopoly power over the insurance of cargo ships moving oil around the world, as though the moat of insurance overwhelms the need of China and India to get the energy that they need. We consider us highly dubious. One of our 2023 predictions to our Pro Tier subscribers was that the price cap would be a total failure. Now, in this scenario where the global economy heads into a deep recession and the price of oil collapses, the cap is meaningless because it's priced above where the market would put oil in that scenario. So that would be one face-saving way for this to just kind of go away and tossed into the bin of stupid ideas. But if oil were to go back to $100 a barrel, I can't see a world where this clunky price cap based on a fake perceived moat is effective in any way, shape, or form. But hey, I mean, what do I know? We've been wrong before, and if we were wrong on this one, I'd love to learn how, because I can't believe that the customers who desperately need that energy wouldn't be willing to provide quote unquote insurance to the cargo ships to get the oil from Russia to where it needs to be. And I think one of the reasons why there's some softness in the oil market is at the time where oil was being priced at very high altitudes, there was a lot of risk premium in the price of oil based on the possibility that significant amounts of Russian oil would not find its way to the market. And as we've learned, valuable commodities find their way to the market either through official channels or unofficial channels, wink, wink. And ultimately, there's always going to be somebody in the chain willing to break some sanction laws to pocket some dollars today. And I wouldn't expect that to change too much based on this cap. So of the flows that we're thinking about that impact whether or not to be bullish or bearish on oil in particular, the oil price cap is deep down on the list of things that we ponder.
It's like one thing you mentioned. I think Germany's even buying Russian oil through China, or we're just calling Chinese like a diesel. I think it is.
And
diesel.
Well, it's refined product. So this is
Exactly.
exactly right. So I mean, ultimately, if the winners in this place are the people who are willing to refine the product, like India and China. But also, same thing we saw with LNG cargoes. Bought from Qatar at a certain price, or pick your favorite seller and then flip to Europe for the spread. Markets have a way of solving for scarcity. And if you have a bidder willing to put $500 billion on the line, you'll get your BTUs one way or the other. And some of them might have originated in Russia, and everybody just winks along the way.
Interesting. Like I'm jumping around a little bit. Your insights are insanely useful. Like for me, like I'm learning a lot. Like I have to admit, I was a bit nervous going into the interview because I don't know much about the energy like markets in general. I'm more of a gold and silver guy, but I find it hugely interesting what is going on. I had Matt Water on to talk about coal, and I learned a lot. So again, humor me if I'm jumping around. But coming back to Germany, we have 12 months time to sort of prepare enough for the next winter. Do you think the energy mix is going to change at all? Do we have enough time to change the energy mix?
Given what we've seen with respect to the lengths to which even the relatively environmentally oriented German government was willing to go to get through this winter, I think the base case needs to be they will stockpile as much coal and oil and natural gas and keep the remaining nuclear power plants up and running, build out their LNG import capacity at record speed. There was a big article in the Wall Street Journal that we chronicled in one of our pieces, showing how with enough government support and cutting of regulatory red tape, the Germans were able to get done in less than a year what would normally take 5 years, i.e. the building of this floating LNG import capacity terminal that is coming online and just received its first cargo ships, I believe, this week, which congratulations, good. This is the desired outcome. That the good people of Germany have sufficient BTUs to get through this winter and next, after which time the LNG import and export capacity around the world will be sufficiently built to fully wean themselves off of Russian oil and gas on a go-forward basis. Now, of course, that Russian oil and gas is still going to find its way to the market, predominantly through China, and the speed with which China and Russia are collaborating to build the critical arteries needed to flow those molecules from going to the west to going to the east makes for a very interesting conversation, and what that means long term for the dollar and the BRICS and gold settlement of international trade, which is a huge topic of interest amongst the gold community. I'm sure you're aware of whether or not these events ultimately manifest in the acceleration of something much bigger that was already had some momentum behind it remains to be seen. There's a lot of speculation that might be a consequence of what we've seen. And to the extent that weakens the sort of Western grip on international power, that's another cost that needs to be put into the bucket of costs that allowed Germany to get through the winter, that appears to have allowed Germany to get through the winter of 2022-23 so far.
Interesting. Very interesting. Like, I love your insights. Absolutely do. Doomberg, like 600 energy companies increased their prices by over 60%. The power bills just exploded. Mine went from 25 cents a kilowatt hour to 45 cents a kilowatt hour. How can we offset our energy costs by investing in the market? Like, if you were to offset it, like if I was an energy investor, where would you put your eggs right now?
Well, it's an interesting question because relative to your investing portfolio, how big is your energy bill, right? And so how much do you really need to hedge versus taking
It's,
your
it's
own?
it's not
Yeah,
millions. I'm not a
yeah,
like
yeah,
small medium enterprise here, or like
yeah.
right.
But
So you
broadly
you get my
speaking,
drift.
yeah, broadly speaking, I do think the disruption in the energy sector is providing significant dislocations that ultimately result in investable opportunities. Having said that, um, we invest exclusively in private opportunities for a variety of reasons, not the least of which is we have good access to interesting deals, and also we can affect the outcome more directly through our own skills, networks, and insights and knowledge of the management team, and so on and so on. And so it's very difficult for me to answer in a way that would be accessible to the average listener as to how they should be investing. Broadly speaking, any investment, any business or company that is seeking to close arbitrage opportunities in the energy sector looks set to make good money in the next few years. But companies that make good money don't always end up as companies that have higher stock prices from where you could buy them today because the public markets are pretty efficient and discounting that information is relatively rapid. But broadly speaking, we look for companies that are well positioned. For example, back integrated into cheap Canadian natural gas, but making something that can be priced globally so that you could basically capture the spread. So any company that can do that is going to make a lot of money. And the reason why we prefer private companies, because if they remunerate their shareholders via dividends, you don't have to worry about the market actually recognizing those cash flows and giving them the proper valuation that they might deserve, which I know many coal investors are frustrated with. Some of their investments are making free cash flow yields of 50%, and the market is basically ignoring those free cash flows or sort of pricing them as a pulse as opposed to sort of a systemic shift to the value of the business. And we can't really, we're not good at timing the market, and we're not good at predicting when the market will re-rate securities. And so when you're not good at something in life, you stop doing it. We are better at selecting private investments and helping those investments do quite well. And we have found that if you can get in the right company at the right valuation, at the right stage of their development, and you could help that company bend the curve of success, that can be extraordinarily lucrative. And so why would we gamble in the public markets when we have a sufficient amount of opportunities ahead of us in the private sector?
Absolutely. I fully get that as well. And on the consumer side, like you were talked, lots more macro. And is there anything on the consumer can do, like to save more? Like I listened, I have to admit, like I listened to your Valthion interview, which was super insightful as well. And you talked about heat pumps. And being in Germany, I know a lot of the new houses here are fairly well insulated, and they all have heat pumps, or most of them have heat pumps and are being incentivized to buy them as well. Um, or do you see any more trends like that, or is that the only trend? Or trying trying to figure out like what we can do as a consumer.
Yeah, it's a great question. So, individually as a consumer, the first question to ask yourself is, at what percent of my monthly bill does my energy needs represent? And if it's a significant one, then you need to take urgent action because the relative payback period for you will be shorter. But the things you mentioned, insulating your house. If you're going to design a new home and you're building a home, obviously getting the state of the art of everything green would be wise because those investments pay off, over decades. If you live in a relatively well insulated apartment and your energy needs are small, a small portion of your monthly bill, then I wouldn't overreact. And you could do the little things that are necessary. And at the same time, as we've said many, many times, energy is life. How much living do you want to do? You can turn a thermostat down to, 15 degrees and dress warm and shiver in your home all day, but is that truly living? And so then you're just forced to decide, is that meal at a nice restaurant worth having my thermostat dialed up a little bit? These are sort of individual choices that are driven by everybody's sort of individual economic situation. But one of the things that you should ponder is not just the financial payback period, but the energy payback period of the things you're doing. And by that, I mean how much energy is embedded in the solution that you're installing in your home versus how long it takes to save a sufficient amount of energy to pay that energy back. That's sort of your societal duty. If you're just sort of talking patriotic, you should be doing things. And put it this way: the energy that you burn, or I would say the energy that you waste fighting entropy, should have as high payback as possible and preserve it for the highest priority things: cooking, cleaning, warmth in your home, as opposed to some of the vanity things or fun things. But these are the sort of sacrifices that are consistent with a failure of previous energy policy. Like when you're asking the citizenry of your country to prioritize their standard of living to the most urgent things, that is a statement of defeat. I mean, ultimately, energy is life, and the amount of energy you get to waste is a direct measure of your standard of living. And all humans everywhere, even Germans, would like a higher standard of living than a lower one. And to the extent that we have failed as policy leaders to provide that optionality to our citizenry, we should ponder the genesis of those mistakes and institute policies that minimize the chance that we would repeat them on a go-forward basis. And to bring the whole conversation back to where we started, my big fear is that the warm weather will be misinterpreted as a validation of a previously failed policy, that the costs of getting us to the point where we could comfortably restock enough natural gas to get through the next few months are ignored. Then we're just condemning ourselves to repeat those mistakes again, and we shouldn't. We should recognize luck for luck. We should recognize costs as expenses, and we should decide that maybe we should reconsider the wisdom of the policies that led us down this road in the first place. And the last point I'd make is the big boogeyman here is we're just going to blame everything on the war in Ukraine when for sure the energy crisis started long before Putin decided to take advantage of that energy crisis to roll the tanks over the borders. And the fact that a lot of the propaganda is focused on the energy crisis that started by Putin's invasion of Ukraine, I think doesn't help anybody and only hurts.
Very wise words, and really appreciate the insights, Doomberg. Like, appreciate your time. I want to give you a second to sort of toot your own horn. Like, Doomberg.com, Doomberg.substack.com is obviously where we can find more. But what are you offering on the website? I know you have a ton of subscribers.
Yeah, no, it's been really great since we last talked. We've climbed our way up the financial Substack leaderboard to #1 globally, which is pretty staggering and humbling and thrilling all at once. And we are all of our writing can be found at doomberg.substack.com. We are 100% subscriber supported, and so that means we don't have any ads and we don't accept sponsorships, and that means that everything we write is 100% editorially free from concern about what a sponsor or an advertiser might think about it. And we believe that that's important, and that contract with our subscribers we won't ever void. And so, yeah, head over to doomberg.substack.com if you're interested. You could sign up for free, and the free sign up gets you a pretty extensive preview of all of our pieces. We write them to the cutoff to entice you to finally subscribe after seeing a few of them. But it's been really the work of our lives, and my personal congratulations and relief for you, Kai, that being in Germany and the last time we talked, things were not looking as bright as they are now. And I am personally happy that you were able to wear shorts at the end of December. And in so doing, we're able to shave off some of the worst case scenario risks that you were fearing, that you were facing heading into the winter. And knock on wood, next winter will be the same.
Yeah. Oh, let's pray that, as you said, we learn from the mistakes of the past and not repeat them next week, right? So fantastic. Doomberg, thank you so much. It was super insightful. I learned more than anything I've been reading here in the mainstream media, so really, really appreciate it. And of course, everybody follow Doomberg also on Twitter at Doomberg. And everybody else, thank you so much for tuning in. We hope you enjoyed this conversation. Again, energy crisis explained. Fortunately, it didn't turn out to be as bad as we were expecting it to be, due to the part that we spent $500 billion here in Europe. So a lot of money. And make sure to follow us on YouTube, follow us on Twitter, hit that like and subscribe button. We put out a lot of great content, and I know 85 to 90% of you are not subscribed to the channel who are watching. Let's bring that number down. I tremendously appreciate it, or immensely appreciate it. And we'll be back with lots more content. Thank you so much for tuning in, and we'll be back.